Welcome to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. Today, December 8th, for my 8th video challenge for December, where I make one video regarding reverse mortgages. I wanted to step back and have a different conversation. This week, in the course of making the videos that I've done, we've talked about different aspects of a reverse mortgage, very important topics. And what I don't want to do is kind of lose the forest through the trees. And what I mean by that is that ultimately there is the mechanics and the nuts and bolts that make up the reverse mortgage, but there's also the very simplistic and reason that the reverse mortgage was enacted, and that has to do with the concept of allowing seniors to have access to a portion of their home appreciation, home wealth. For today's video, what I wanted to do was talk about the simplicity of the program, because while there's so many different aspects of it, and I know there's unfamiliarity, and with unfamiliarity comes discomfort and for some people fear. And one of the videos that I did before Thanksgiving talked about, for some people, when you say reverse mortgage, it has a Pavlovian response for them. It triggers them. They automatically think the worst and they run out of the room, or their ability to communicate on the topic shuts down, and you could just see this wall go up. And it's very unfortunate when I see that, because I know that no matter what I say to this person, how much I try to convince them, what information I try to share with them, and what resources I try to provide them, they're not going to budge, and they're going to double down. And it's very unfortunate, because I know ultimately, with the numbers that I shared in one of the videos, this year alone, in the fiscal year that just ended in September, 64,000 and a couple hundred seniors took advantage of the reverse mortgage. Since inception and Congress enacting the law into place and President Ronald Reagan signing, over 1.3 million seniors have taken advantage of the program. The new FHA loan limits were announced, and starting in January, it'll be over $1 million. Right now, it's $970,800. So they increased the rate, I think, by about $85,000. The program is regulated by FHA and HUD. So all of these things tell me that the program is here to stay, and it's not going anywhere. It has the backing of the United States government. The last 10 years, the amount of research and information has been significant. So all of these things tell me that from the perspective of the government, the program is able to help seniors. And if the United States government, if the two regulatory agencies that regulate reverse mortgages, which is HUD and FHA, didn't think that the program is good, they wouldn't have offered it. And again, to this point, I made two videos regarding whether you think that a reverse mortgage is a scam. And the funny part of it to me is that I've already had one viewer accuse me of using the word scam and whether a reverse mortgage is a scam as clickbait. Clearly they didn't see the video, because as soon as the video opens up, within the first 10 seconds, I ask, if you think reverse mortgages are a scam, then you also think Social Security is a scam and Medicaid is a scam, because it's the United States government that's behind all three of them. But for this video, I feel like it's important that we get away from the nuts and bolts and just kind of focus on the simplicity and intended use of the program. And to be able to accomplish that, I wanted to kind of share a visual representation of what this program means to me. Obviously, if I didn't believe in it, I wouldn't have gotten and encouraged my parents to get the reverse mortgage on their own home 15 years ago. And 5 years ago, my father passed away. My mom still lives in the same house. We haven't had equity stripping. She hasn't been foreclosed on, and nothing alike has happened. And the quality of her life has significantly improved, because she doesn't have to worry about the financial stresses of making monthly mortgage payments, which is the whole reason that I want to share this with you. So for the purposes of this video, I wanted to pull back and not lose the forest through the trees, as they say, not be so concentrated on the mechanics and the nuts and bolts and all different aspects of it that we really lose the simplicity of the program and its intended purpose. So go with me on this conversation, and I want you to imagine that this beautiful box is representative of the house that you live in, the house that you maybe purchased 20, 30, 40 years ago. So if this was the house that you purchased and you have been living in, this house now represents something that in its original purchase was significantly lower in terms of cost than what the property is worth today. So I shared the example of one client that I had. She purchased her house for $40,000, and 40 years later we appraised the property for $1.3 million. So that's the kind of number that I'm sharing with you. So whatever the value of your house was, and I like to use the word that there's some higher than what the amount that I refer to, and there's some that are lower. But $1 million to me seems very ordinary these days in terms of house value, given that literally condos in Los Angeles are $1 million, and it's not that hard to come up with $1 million property value. So if you imagine that you purchased your house or condo, your residence, 20, 30, 40 years ago, you may have purchased it for like $100,000, $200,000. And time and space went by, you had the mortgage, you've made payments, and through housing wealth and housing appreciation, now you have a significant amount of equity built into it. Yes, partly because you paid down the loan, but significantly because of the fact that property value appreciation caused a lot of housing wealth. And the reverse mortgage conceptually has to do with the concept that we're going to let you have access to a certain portion of that housing wealth. And that portion, in the video that I did, we discussed the three factors: the property value, the interest rate of the program, whether you get the fixed or the adjustable, and the age of the youngest borrower. And if one of them is 62 and the other one is 55, we're going to do the reverse mortgage because the 55-year-old qualifies under the other spouse who's at least 62. So this was your house when you purchased it 20, 30, 40 years ago. This house has grown in value and appreciated significantly, so it's not in this format anymore. The house that you have now, in terms of value, is this beautiful box now. It hasn't grown in size, but it has grown in value and appreciation. And this was the example that we're talking about where the house is worth $1 million. So if we say now your house is worth $1 million, what we're talking about is saying we're going to give you access to, typically everything else being the same and equal, to 50% of the value of the house. And again, I know that there's some variables here that we need to look at, and specifically how much you owe, whether you owe zero, whether you owe some money, whether you owe enough to just pay off the mortgage and get not get a reverse mortgage, line of credit, which is something that I'm a big proponent of. For simplicity's sake, we're just talking about the fact that 50% of typically what the house is worth is what the number is that we're working about. So if we say this property is worth $1 million, all we're talking about with the reverse mortgage is being able to access a portion of that. So if I reach into this house and I take out what I will represent to be $500,000, this is the concept of the reverse mortgage. You've accessed a portion of the equity, the housing wealth, from what the previous value was when you purchased it originally 20, 30, 40 years ago. And now you have access to a portion of this property value. Now this property value, depending on what your particular situation is, let's say you owe nothing on the property, well, we're going to use this as a starting point to build you a line of credit so that when you need it, it's available for you. Let's say you owe $200,000 on your current mortgage. Well, we're going to take $200,000 and we're going to put that aside, pay off your old loan, and we're going to establish a line of credit with the balance of the money. If your situation is that you owe mortgage that's higher but enough so that you still qualify for a reverse mortgage, what we're going to do is we're going to pay off your existing mortgage, and by paying off your existing reverse mortgage, we're going to eliminate the monthly mortgage payment. And that elimination of monthly mortgage payment is going to give you flexibility so that your sources of income that are coming in are going to be used to pay for other expenses, whether that's housing expense, your personal expenses, long-term care expenses. Whatever the situation is, it'll give you more flexibility than you have. And at its most basic format, that's what a reverse mortgage is giving you access to a portion of the equity of the house. And if you keep it as simple as that, then you could always go back and look at the other videos that I've done to get more into the weeds and more into the specifics, and we'll cover more in the next 3 weeks that I have this personal challenge out for myself of 1 video a day. This was it for today. Wanted to make something quick and simple to relate to. I appreciate your viewing. I appreciate you sharing these videos with people that you think could be helped by them. And if you have any financial advisors or estate planning attorneys that could benefit from it, or you think that this would be a good topic to talk to, please share this video with them. I'll see you tomorrow. Thank you very much for watching. Have a beautiful and blessed night. Thank you for being my client, and God bless you.